Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, July the 12th. The year's 2020. Let's talk trading. It's time for the weekly open and gap. But first, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. So, as you can see, we're 7 hours into the trading day, Sunday, Monday, depending on where you are in the world. And we have 2 pairs that have not filled the gap. So anybody trading the gap fill, looks like you were rewarded. And for those of you just tuning in for the first time, the open gap is where the price opens either below or above the close on Friday. This usually happens in the foreign exchange. Sometimes the gap can be small, like here, 4 pips, and sometimes it could be large enough where you could make a nice return, as in here, 17 pips. And I just want to remind you all of one thing. When you're trading, always have your risk management in place. Don't lose any more on any single trade than you're willing to lose on a trade. In other words, you have your position size and stop loss. Position size correct and your stop loss placed correctly. Get your brain in gear. Don't fall for any of these. So if we look at the daily, we can see a big green daily bar here on the pound dollar. We are 40 pips above the open. 1, 2, 3, 4, 5, 6, 7 green candles in a row on the pound. And we broke through the monthly inside bar that occurred 3 months ago, and 8 pips to the good. So once again, a simple horizontal line trade, trading with candle color at the line. It's obviously something happened with the franc yen. I don't know if that was a fat finger trade or what, but we have 233 pips of range where nobody else is even at 100. Let me know if you traded this and if you banged, 100 or more pips off of that. Looking here at the buy zone, the pivot point was inside the buy zone between the buy and the sell zones, close to the open. So there was no bias there, but we did gap down. So the trade was long, and you can see here the first hour we filled the gap. And then there was a second time to get into the buy zone here. And for the pro traders, a third time. And you can see what's happened since then. Price has taken off. And here we have the rat zone, 44 pips. The range is large enough, but there's only 4 pips between the zone. So tread lightly. And take your profits when you can. Moving on, looking to the pivot, we have a weekly pivot this week, 125.84. So we'll see if price fills that pivot, but we know it missed the weekly pivot last week. And there's this week's. So who knows, it might take a couple of weeks. Here we missed one. It took 1, 2, 3, 4 weeks to come back. And as you can see, we didn't miss a pivot in 2019. It filled. Well, I shouldn't say we didn't miss it. No pivots went unfilled. And for those of you just tuning in, with the pivot trade, from the open, you trade towards the pivot. From the open, you trade towards the pivot. So if the pivot's below, price opens above the pivot, you look for a short. If it opens below, you look for a long. And we are in the upper wick zone here. Price went in, it came out, and went right back in. Looking here at the smart range chart, we have the smart ranges. We're looking at the high minus low. We're at the 1%. We're only at 44 pips. So obviously there's definite room for price to move. And I also sent out, for those of you who donated, I sent out batch 6 today. And in there was the indicator, the smart ranges all. So here you have to put up an instance for high minus low, high minus close, close minus low, high minus open, or high minus close, and high minus previous high, low minus previous low. With the smart ranges, it gives you, for whichever bar you want, usually the current and maybe the previous, it gives you all of the options. In fact, maybe I should pause the video and show that. So here I loaded a copy of the smart ranges all. So you can see here you have close minus open, high minus low, high minus close, close minus low, high minus open, open minus low, high minus the previous high, previous low minus the low, high minus the previous midpoint, and the previous midpoint minus the low. So you can tell where price is in regards to these various levels, and you can also find out what the ranges are. And you might want to know, well, how in the heck does that help me? Well, let me give you for instance here. Let's say you want to trade one of the different methods that I presented. So perhaps in the rat zone, you'd want to know, first you'd want to know the close minus open. So it's at the 62% level. That means there's more room for it to go up, most likely. High minus low at 44 pips, that's at the 1 percentile. So that means only 1 out of the last 100 days had a range less than 44. So there's room for it to go. Now, for example, if you were trading a breakout, say the wick zone, you want to trade out of the upper wick zone, you can see here high minus previous highs at -5. It hasn't quite got there. So you can see this can alert you to a possible trade. So it's like, oh, it's only 5 pips. Maybe I should keep my eye on it. So that's one way of using it. Now, once again, with the rat zone, you'd say high minus close, it's at the 2% level. It could be a reversal, but once again, if the high minus low is only at 1%, you might want to wait for this number to approach something at least 50 before you start to look for a reversal. Because as you can see here before, on the high minus low, previous day, 97, that's at the 22 percentile. 81's at the 16. 114's at the 41. 130's at the 55 percentile. So yes, you should be looking for price to get somewhere at past 80. Just looking at the last 4 bars. But that's still only the 16th percentile, meaning 84 bars had a range larger than 81. So that's why you have to watch the price action. And then you can also use the H1 for the same. So for example, this hour just started 4 pips, 0 percentile. That means you know the price is going to have to move. It just has to, right? It just can't stay where it is. A 4 pip range, that's pretty tough, even though last hour was only 9 pips. So when you start to look at the last, few hours, you can get an idea what to expect. Now, once again, anything could happen. It could be a lot less, it could be a lot more. You just don't know. That's why you look at the gauges so you can see what is possible, because anything is possible, but at least you know statistically, well, do you really think it's going to get higher or lower? Do you think it's going to expand? Do you think it's going to reverse? You just have to play the price action. So speaking of price action, now let's look at the price action chart here. Once again, green at the line. This is just the sweet spot lines. And for those of you new to the channel, new to my methods, here's the indicator sweet spot gold that I heavily modified. But I'm not really showing many of the modifications here. But you see, for this hour, you've got a long trigger at 2660 and a short trigger at 2650. But you would actually take the long trigger off of the previous hour at 58. So rather than wait for 60, you see if it breaks there, it'll break to 60 most likely. Or it might stop at the 60. But if you get in at the 58, you've got 2 pips to your advantage. And if you're trading 50 or 100 bucks a pip, you know, that's a nice little trade. Unless, of course, you're managing millions, tens of millions, hundreds of millions, and then, you know, that wouldn't even move the needle. But chances are, if you're trading that much, I don't think you're tuning in to my channel. Oh, and someone said they wanted to look at scalping. Well, I'm not sure what you're looking for, because all of the methods I present trading at horizontal lines, you can use them as scalps. In other words, if you just want to take a pip or two, trading at the horizontal line is really powerful and can be profitable. But remember, methods aren't profitable, traders are profitable, because I can give the method to 2 different traders and one can be profitable and one might not be. So it's not the method, it's the trader, as you all know. So once again, on the simple price action, green at the line, profit, green at the line, profit, red at the line, profit, green at the line, profit, profit, profit. Here, red at the line, probably you got your fingers burned. Or you could still be in that trade because maybe you didn't put your stop loss until 10 pips away. And so maybe you're waiting for it to either stop out or turn around and come back the other way. So you can see here, even on a Sunday/Monday, it's still profitable if you take the trade. And that's all you have to do. Once again, I'm going to continue with the trading step-by-step series this week. Got some good ones. I got some nice positive feedback on last week. I appreciate those comments. I'm glad I can help you possibly become profitable or more profitable. But the main thing is you just have to realize that once you put the trade on, there's nothing you can do except manage the trade, meaning make sure your stop's in place, make sure you're moving the stop when and if appropriate, and make sure you take profit. I mean, that's it. Because no matter the reason why you got in the trade, it doesn't matter once you get into the trade. There's a complete disconnect there, and that's something you have to realize. It's kind of like I'm thinking of one of those, you know, moonshots or something. You know, as soon as that capsule disconnects from the booster, well, it's a whole different ball game then. Kind of same way with trading. So, fellow traders, I hope you have had a profitable month so far. I hope you continue and have a profitable week this week. And when you sit down to your trading platform, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if this is your first time tuning in, please click subscribe, click like, click share, click the bell so you know when I put out another video. And, you know, visit me on Facebook, TheRumpledOne, signing out.